Hey, Mike.
Hey, Maggie.
Welcome to Friends on Fire. We are a podcast on a mission to get friends to talk about money.
So what have you been up to lately, Maggie?
I'm super excited that we're sitting in our new podcast table and setup.
Was it marketed as a podcast table, or is it just a table that we've...
It's a table from IKEA. This is the same table my kids do artwork on upstairs that I just bought a second one of. Pretty inexpensive, very good quality, just like a simple, nice, big white table.
It does feel more official now that we have some space.
We had some kind of like not so great setups for our first ones, and we can just sit here with, normal posture, not like hunched over some other tables and setups we've been...
Yeah, we have chairs.
We have like adult-sized chairs. Yeah, it's great. So anyways, I'm excited to be able to have a nicer setup for this recording.
It does feel more official.
Yeah.
Thank you for picking this up.
Yeah, no problem. You'll get the bill soon.
Oh, great. So this week's episode, we're going to be talking about car insurance. This is a follow-up to our car purchase episode, which I think people really liked. Who knows? We're still waiting on the feedback.
Yeah. But if you thought cars was exciting, just wait till we start talking about car insurance.
Yeah, I had the privilege of working for an insurance company for 18 months, and it was not fun.
Really?
So we're going to try to make this episode more exciting than working in insurance.
Okay, well, you set a low bar there, but we'll see what we could do.
Right. Like we did with our previous episode, I think it's pretty fun to start with a question from a caller. It kind of mixes it up so that we're not just blabbing about one thing that may or may not be of interest to you. So we got a question today, and we're going to play it right now and try to answer it.
Cool. Let's play it.
Hey, Mike and Maggie. Love your show. And Mike, I love your new book, Your New Relationship with Money. It's awesome. I have a question for you guys. And my question is, my husband gets random stock tips from the internet and friends. How do you recommend that I discuss these with him before we actually invest the money? I would love to hear your answer and your tips. I really appreciate it. Thanks so much.
All right. So I really like this question because it kind of addresses two things. One is about the pitfalls of investing and how much like misinformation, bad information, just like general volume of information there is. But it's also about how do you talk to your partner about these decisions? Because this investing should be a joint decision, and you need to be able to have productive conversations. So she's asking the right thing, like, how do I talk about it with my husband? Maggie, do you ever get any investment questions from Greg, or do you bring him any kind of harebrained ideas that he needs to address with you?
Not really, but that's because I don't do a good job at actually making investments. I just save my money and keep it in overly conservative things. So
talking about it, definitely the first important right step. I think from an investment standpoint, though, if you are hearing about these quote unquote tips out in, publications, it means that the movement has already happened by professional investors. So if you read about on a blog or in the newspaper that some company might have some breakthrough new cure, the stock has already gone up or down based on that information weeks or months ago because professional investors heard about it. So the likelihood that you're going to strike it rich with some publicly available stock tip is quite low.
And if you're hearing about it super early, it might be insider trading.
That's right, which is illegal.
That's also not good.
So keep that in mind, that it's probably not as great of a tip as you might think. Really what you should be doing is, researching the company. And I understand that not very many people are going to have the experience or skills necessary to go analyze a company's performance and determine if it's a worthwhile investment. If you are going to speculate and take a chance on something with the hope that it strikes big, like you can do that. Like those investments might have a place in your portfolio and in your life, but you need to go into it with your partner, understanding that we might lose 100% of this. And we're okay with that. We understand that this is risky, and we're just excited and we want to take that chance.
Do you think that the average person should be buying individual company stocks, though?
I think if it's a small amount of money that they don't mind losing, I think it's okay to speculate. If you have 98% of your 401k in something that's fairly stable, that fits your risk profile, and you want to go spend $1,000 to go pick up some pharmaceutical company that might grow 10,000%, like you can go do that. It's not going to ruin your life, but you need to go into it with that approach. You don't want to put 100% in this risky stock because you could lose it all.
Yeah. I think picking individual stocks, like makes me super nervous and just kind of stresses me out, honestly. Like I prefer more balanced funds and vehicles personally.
It sounds like you should discuss this with your husband.
Yeah.
Sounds like great conversation.
Yeah,
over
it's
dinner.
great. It's great dinner table conversation.
Well, hopefully that answered the question. I think it's great that you two are going to start talking about it. Maybe let us know how it goes.
Yeah, and we'll do a more detailed episode on this topic someday soon. It's a good topic.
Yeah, definitely. All right. So, sexy topic, car insurance.
Very exciting. So, like we do with many of these topics, we first want to start with a little bit of just our personal situations tied to car insurance. So we're going to share what we are each paying for car insurance, which was eye-opening exercise for me. Mike, why don't you go first?
So I'm with Amica, which
Can you spell that?
Amica? Yeah. Amica.
Yep.
And my parents introduced me to it. My whole family, my sister and her family's on it. So great company, smaller than the big ones, but been very happy with them. So we have, as discussed in our previous episode and every episode, 2003 Ford Explorer, 2014 Ford Edge. On the Explorer, we pay $578 a year. And on the Edge, we pay $862 a year.
Okay, so this is just the revealing time. We'll get into the judgments and discussions on these amounts. I'm just totaling your total, Mike. So you pay $1,440 a year for two cars. That's so both of our cars are with Allstate, and we've been with them for a pretty long time. The 2010 Prius is about $1,350 a year, almost as much as both of your cars.
Wow.
And the 2016 Prius is about $1,500 a year. It's about $2,900 total across both cars. This is like stressing me out because we actually just did this comparison last night while prepping for this episode.
And when was the last time either of you were in an accident?
Well, so this is what's so funny is I didn't think it had been any time recent. Like I've not been in an accident in a really long time. And I didn't think Greg had either. But let me get back to the accident question in a second. So when I saw your rates, I immediately was like, oh my gosh, that is ridiculous. I'm getting, like, this is not fair. I should not be paying, almost $3,000 for two cars. I have shopped around a good bit over the years, and I felt like that was about the best rates. Like, I've done a number of shopping around, like, again, over the past few years with car insurance and homeowners insurance, which are both with Allstate. And every time I do it, I'm like, the savings it's maybe that we might save $100 or $200, but our deductible would change. And it just didn't seem worth it to make a switch. But when I saw this again last night, I was like, this is ridiculous. And I was doing a little bit of research for the show, and I went to Progressive and got an online quote. So at first the quote was about $1,200 a year for both cars. And I was like so excited. I was like, oh my gosh, I just saved $2,000. This is why friends should talk about money. So exciting. And then as I put our driver's license numbers in at the end of the process to kind of like validate and make the purchase, it more than doubled.
Uh-oh.
And I was like, why? And so then I call a rep. It was Friday night at like 11:30. I'm impressed Progressive answered the phone. A very nice gentleman named Don answered. Thanks, Don. And very delicately explained to me why it more than doubled and pulled up Greg's driving record and referenced this was this ridiculously silly accident he had like 2 years ago. He like barely hit someone right in front of him, and he got a ticket for following too closely. So it was like there was barely any damage to the other person's car. It was like moving at a mile an hour, hit somebody. Anyways, it is ridiculous that one little accident, and he got a ticket, so it like double pinged us as a ticket and a accident, is costing us over $1,000 a year, which is pretty. I really gave Greg a hard time about this last night. I think he feels bad now.
You're like visibly worked up right now.
It's just upsetting that such a silly little thing can cost you $1,000 a year, right? Like it just doesn't seem fair, but whatever. First world problems. So by the time I finish the process with Progressive, I've gone through like a range of emotions. I'm so excited. I'm like, I've got another $2,000 saved. This is so great. Then I'm like, oh, never mind. Well, it's still some savings. Then I add our homeowners insurance into the mix, and that's more. The Progressive quote was like a reasonable amount more than Allstate charges us. So combined, this is what I've found in the past when I've price shopped. The combined total in the end was going to save us $400 a year. And so I was like, was it worth making the change? The deductible was going to be a little bit different. You look shocked, like, yes.
$400 is a lot of money.
It is.
for basically not doing any work. The work was all done at that point.
Well, I mean, I need to do a little bit more work because it's not completely apples to apples. So I need to change. I need to see if like, for example, I thought it was actually fascinating, and I know you'll get into this, Mike, but Progressive actually recommended that we don't have collision and accident coverage on the 2010 Prius. And when I called and asked the guy why, he said it's just because of the value of the car. And I was like, oh, that's interesting that you're not even recommending we insure that one at the same rate as the other car. So we actually had an interesting conversation about whether we're kind of overinsured on our cars in general.
I'm pretty sure you are.
Yeah. So the point is, I don't know what the point is.
All right. Well,
all we wanted to do was share how much our car insurance costs. Clearly mine's too high. I'm working on it. I'll share some updates over time.
So let me connect the dots with that accident and what you're paying. So the thing about insurance...
Accident's a strong word for what actually happened, just to be clear.
The incident.
Yeah,
the
incident. Thank you.
And ticket. As I mentioned, I worked in insurance for 18 months prior to working with you, Maggie, and it was a very educational experience. And the thing I learned in working with all the actuaries there is that insurance is calculated based on the frequency times the severity of an incident. So if 1% of policyholders are going to have a car accident each year, and that accident will cost the insurance company $500, then each person needs to contribute $5 so that that one person can be covered. You are paying for everyone else's terrible driving and their incidents that happen, that even though they might not be fair. Like if you're a safe driver, you might pay thousands of dollars of insurance for decades and never have a benefit ever. Part of this is understanding what is your personal frequency of events so that you can determine how risky is it that you're going to need coverage. Mm-hmm. And so the insurance company is going to look at Greg and say, he had a incident and he got a ticket. Based on our algorithm, he is now higher risk. So he is now higher frequency. We need to collect more from him so that we can cover his future losses. And so this makes a lot of sense from their perspective. It's not fair. It's annoying, but that's the way it works.
So one of the conversations that we got into last night while talking about this was when Progressive made that recommendation about not insuring, you still have to have certain types of coverage required by law, but you don't have to have collision and a couple other things of coverage. But when they made that recommendation, at first we were like, well, that's like weird to not have any coverage on this car. And I was kind of explaining, I was like, well, it's similar to the idea of a high deductible medical plan, which we've moved to. We're like, we know there's risk on it. If I broke my arm, I'm going to have to pay a lot in medical bills, but I do know if it did happen, I could afford it. And I'm taking that risk to not have to pay ridiculously high insurance premiums. And it's kind of the same thing with car insurance, right? On like, what's a reasonable deductible and what's a reasonable amount of insurance you actually need. So I'd love your thoughts, Mike, on like, how much insurance do you need? And how do you know?
So my view on insurance and any type of like extended warranty coverage is to protect yourself from the cash requirements of fixing that situation. So you get some coverage on your TV so that if it breaks, you don't have to go buy another $1,000 TV. Maybe you can't even afford a $1,000 TV and that's why you have the policy, or maybe you don't want to. And so with car insurance, like medical insurance, in my mind, it's to protect you not from the $100 scratch that you get on the car. It's to protect you from getting into an accident and being sued for $1 million.
Yeah, it's funny. That's what Greg's concern was too.
So it's the catastrophic loss that you're protecting yourself against, not to get yourself helicopter pickup on the side of the highway or, whatever kind of like, concierge service they try to throw into your package. Like that stuff doesn't matter. You shouldn't need, to be bailed out of a $50 expense. You want to be bailed out in case you have a $500,000 expense based on medical liability. And so if it wasn't a legal requirement for me to own car insurance, like I don't think I would
consider not having it.
The liability stuff kind of does scare me.
Yeah, it makes me nervous.
Yeah, but I don't have collision on my car, and maybe next year.
What about on your wife's?
On Britta's car, we do because we're only paying $150 a year for it.
Yeah,
and so that seems to make sense because it's still a nice looking car. I would want to fix it. If it got damaged, but not mine. I don't care.
I think that's one really important tip that I don't know if you realized you were just making, but when you said it only cost you, $150 or whatever for collision, one thing that I noticed last night in doing the comparisons are on Progressive, at least, this is not an ad for Progressive, by the way. I've not even purchased their insurance. But
this show brought to you by Progressive Insurance.
I love all of our not sponsors. But they have their site's actually really helpful where they give you a recommendation, but you actually can see the breakdown of like, if you add rental car insurance, it's going to cost you another $9 per 6-month period. And it's like, for that, I'm like, I'm actually willing to pay $18 a year to know that if I need a rental car for 2 weeks, which is going to cost me like, hundreds of dollars, I might be willing to pay that. But I love the idea of you can look at the breakdown and the details of what you're paying for the different types of your insurance, the different parts of your insurance, and decide if that is important to you, right? And so a lot of times when you get a quote from an insurance company, they're just quoting like a general amount or a general sort of recommendation. But like you can, whether they do it on their website or whether you need to speak to a rep, you can say, okay, what if I change this amount? What if I change my deductible? What if I change whether I have a rental car? Do it with or without roadside assistance? What's the cost difference? And I think really understanding that breakdown is important because then you can make a very educated and conscious decision about what you do and don't want. Because even with my $3,000 a year premiums, which are seeming ridiculous all of a sudden, I was seeing on Progressive's site that I can pull off and on all of these different things that we may or may not need. And some of them didn't really help that much and some of them helped a lot. And I think seeing that breakdown is super important.
Yeah, if things come itemized, you can really give yourself the opportunity to ask yourself, is this something I need?
Yeah. And if they don't come itemized, ask the extra questions because they will give you the difference. You just have to ask sometimes. They may not automatically tell it to you.
And going back to your rental car coverage, so if it's $20 a year and you're like, well, I guess over the past my lifetime as a driver, I've gotten in an accident once every 5 years. So you're really paying $100 for a one-time benefit. And then you ask yourself, well, am I going to spend more than $100 on rental cars? Or could I like have friends? Could I get Uber? Could I do something else?
Yeah.
And so if you look at, again, your frequency or what you estimate your frequency, you can kind of do your own math and see if it's worth it to you.
Yeah, that's a great point. Oh, let's talk about deductibles a little bit. Like, what's your view on deductibles, Mike?
Deductibles are...
What is your deductible? Sorry, on your policies.
The highest one they offer.
Okay.
I won't even know. On all insurance policies, I choose the highest deductible. Yeah. I got in an accident when I was 16, like a minor one, but neither my wife nor I have filed a home claim, a car insurance claim. We're just like very defensive drivers, very kind of safe people. I'm going to get in an accident on my way home.
I was going to say, also, you like imply that like I'm not. I've never been in an accident that's my fault, to be clear. Other people just hit me, which is, I'm probably doing something, but.
I think the insurance company would still penalize you because.
They do, because that's also on there.
Right. Yeah. So this is part of like the actuarial work. Because
the good news is in January, I hit my 5-year mark and one thing goes off my record. So. Oh. That's exciting. Oh, well, Progressive dude told me that last night. He was like, well, the good news is in January, this one will fall off your record.
Well, congratulations, Maggie.
I was like, thanks, Don.
All right, so
it's
back to deductibles.
Fun hanging out with Don on a Friday night.
So the question about deductibles. If you have the mindset that you're protecting yourself from the catastrophic event of being sued for $1 million, then it doesn't care if you have to pay $500 or $1,000 or $2,000 for your collision insurance, because like that's not your objective. You're not protecting yourself to save $500 on some repair. You're saving yourself for the big one. So I always choose the highest deductible and just know like, if my deductible is $1,000, like I have $1,000 in cash, I can cover this. It's not a big deal. I have bigger problems in my life if I get into an accident that requires this. Across the board, every single insurance or warranty plan I choose the highest deductible.
So my school of thought of being a little bit more hesitant to leave Allstate because they give you some, like if you've got loyalty with them or tenure with them, they like slowly waive your deductible over time. So I've got this like built up amount off my deductible because I've been with Allstate so long.
How much is it?
It's $500.
Okay, and how much money were you saving with your new quote?
$400. I feel like you're doing basic math for me.
I am doing basic math.
$400.
I hope you just connected the dots.
I did, yes.
Okay.
So I should stay with Allstate. Oh, wait. Wrong answer.
No, that was a wrong answer. This is all a marketing scam that they try to retain you. I think we just solved this one.
Okay. I'll share an update on my car insurance soon.
Spoiler, she's going to switch.
I did, by the way, get quoted from Amica a while ago when you first showed me Amica, sorry. When you first showed me your rates. And it was actually more for me, for my homeowners and car insurance combined. So, and I've tried USAA. I've tried a lot, which is another good tip. If you USAA they have really great insurance and a great reputation for customer service and other things. And it is only for military or ex-military. But if you have a family member who's ever been in the military, you can actually join through them. They can get you like a kind of code or whatever to be a member, an eligible member for life. And so like Greg's father was in the military. And so we can do USAA, but I was even theirs, like one of them was more and one of them was less. And in the end, the total was not any savings. So
this show is also brought to you by USAA. We have a lot of sponsors now, I think about it.
I think on that, our biggest point would be, make sure you are doing comparison shopping every few years because a lot of things can change. A lot can change even just with your risk profile of like things coming on and off your record based on a lot of accidents stay on for like a 3 to 5 year period. Constantly shop around every year or two to make sure that you still got the best rate is always a great tip, not just for car insurance, but for many things.
Yeah, for everything. And think about what you're really trying to protect yourself against. And I would encourage you to think about protecting yourself from the big losses, not the inconveniences, because you pay a lot of money and not get a lot of benefit for those.
I think another great point is usually you should pay for your car insurance up front. Almost every company, you get a pretty decent sized discount for paying for like a 6-month policy all at once or a full year versus paying monthly. And so hopefully if you can afford to do that, you should definitely take that as an additional savings opportunity.
And then lastly, related to our previous episode on cars, the more expensive your car, the more you're going to pay in insurance. So if you go back to the frequency times severity equation, the severity of a more expensive car is going to be a more expensive repair, which means you're going to pay more for your coverage. And so if you buy a beat up car that doesn't cost much to repair or doesn't need to be repaired, you're going to save money. Car decisions have repercussions to your total expenses that reach further than just the initial purchase.
Okay, so let's recap this a bit, Mike, with just our top 3 points about car insurance. Is 1, ask yourself, what are you really protecting yourself against? 2, shop around, get the best rate. And 3, do not pay for services that you do not need.
Yeah, just keep it simple.
So yeah, I think one of the things that we've talked about on this show a lot is just the value of sharing information and being really transparent with friends about money and financial situations. And I think just what Mike and I did at the beginning of sharing, how much we're each paying on our car insurance and asking other friends, like, what are they paying? Because most people would tell you if you ask. It's just that we often don't initiate the conversation. I'd encourage people to, ask others what they're paying, get a sense of where you're at versus others, if it seems normal, if you think there's some savings opportunity for you or for someone else. But then also give us a call. We'd love to hear what you're paying on your car insurance, any tips and tricks you may have on ways you've saved money on car insurance, or even any just questions on the topic. We're happy to answer. So definitely feel free to give us a call with any information about car insurance you want to share. You can do that at 404-981-3370. And then I think we're going to move on to Mike's Minute on the Mic.
All right, let's do it.
All right. Okay. I got a really hard-hitting question today. Are you ready for this?
I'm ready.
So just as a reminder, this is where I ask Mike a question and he has 60 seconds to answer it. Okay, Mike, what do you like to watch on TV?
Oh, I have an eclectic mix. So I like watching shows about Alaska. So, my secret
about your dream is
fantasy
to homestead in Alaska.
Quit work in
Is there a whole category? Oh, I'm not supposed to talk. Go ahead.
Yeah. No, I mean, there's like a whole Discovery Channel, I think, is 80% shows about Alaska. So I like watching shows about Alaska. I like watching dramas, like kind of mini-series dramas on TV. Like the whole like Netflix Prime thing where it's like a 10-episode series. I really love all that sort of stuff. So
like, what's a good show you've been watching recently?
So like Man in the High Castle.
Man in the High Castle.
I really enjoyed. Those 4 seasons. Just finished that one.
Yeah. We're actually in the middle of the last season right now.
I feel like this is like a non-finance question, and then it's throwing me off my game. I'm very concise.
You only have 10 seconds left because I keep interrupting you.
So it's shows about Alaska and then Man in the High Castle.
Okay.
Damn it.
Great. Okay, thanks.
All right, you got me.
So we will wrap this episode up. We hope you've enjoyed this riveting discussion on car insurance. By the way, that was kind of a pun. I didn't even plan on it. Riveting? Aren't there rivets in cars?
I mean, maybe in like the 30s.
Okay.
No, I guess there's still
a riveting discussion on car insurance. Okay, we just said this just a second ago, but if you have any questions or comments, feel free, as always, to give us a call at 404-981-3370. You'll be famous and we'll play you on the air.
Please subscribe and leave a review on iTunes or wherever you listen to this podcast. It really helps other friends find our material.
Awesome. You can also find us at friendsonfire.org if you want to check out the latest updates, sign up for email alerts, or just get in touch with us.
Thanks, Maggie.
Yeah, thanks, Mike.
Bye.
Bye.